The Hedgeless Horseman here. It's April 29th, 2023. This will be my first video in a few weeks, I think. I'm currently a bit sick, so you'll have to forgive me, but I have gotten a few requests for some copium. So I felt like I should get something out at least. First off, here's a monthly chart of gold. We closed at 1999 yesterday, Friday. And yeah, I mean, it's obviously an arbitrary line. It's like there's nothing special about 2000 except for psychology, and of course, one would say it's an important resistance zone. And obviously, if, let's say, some people wouldn't want gold to go higher or close about 2000, I mean, 1999 is better than 2001 at least. But in the big scheme of things, I mean, this is unimportant. I mean, it's almost funny. Well, I shouldn't say it's unimportant, but it's like, I mean, people watch the gold price more than they even think about the companies they own. I mean, what does it matter really if, let's fast forward 6 months, if gold is at 2,100 or gold is at 1,900. That's still a $200 spread. And people are more worried what scenario of those is going to happen than it's like what the companies will do. I mean, let's say you have, or let's say 2 years ahead. Let's say you have a junior that could, I don't know, increase the value, ounces in the ground, whatever, by like 200-300%. I was going to say, who cares then, especially from these valuation levels, who cares where gold is going to be? Or in 6 months or whatever. It's like I'm trying to focus on the ones that will create value, or at least are cheap right now, so they don't even need gold to go higher. If gold goes higher and sentiment changes, that's a bonus, because as we've seen, gold closed, this is the highest, I think, monthly close ever in the history of gold. Do you see the gold miners at all-time highs or all-time high valuations, or juniors? No. Which makes it even more funny, because in that case it's like, yeah, okay, even if you're just sat in whatever juniors and like, hey, I'm betting, I'm all in gold miners or gold juniors because I think gold is gonna make a all-time high monthly close. How much did you actually get rewarded? I mean, it depends on where you bought actually, obviously, but that's kind of the point. It's like sentiment and the stocks have their own life. They don't necessarily follow gold, as we've seen. I mean, most juniors are actually not far off from being, the cheapest ever. But gold is at the most expensive level ever. I guess my point is, there's like, if you're trading just gold, sure, gold price is the only thing important. If you're in miners, for example, it should be beyond doubt right now that that's a completely different game. Back here, I was dreaming of $1,600 gold. I couldn't even imagine how high the juniors would be trading if we got to $2,000 gold. When we got to $2,000 gold, the juniors were still pretty much trading like the gold, well, like they were back here when gold was at $1,350. And now, when they're even higher than here, we're actually cheaper. So of course people get frustrated. Of course people will sell out or whatever, because they're like looking at noise, and then, I mean, you kind of, if you even were right on gold, let's say, so far you haven't gotten the big payoff in miners. So some people will see that as a cue to, hey, it's not worth being in miners. It's not worth being in juniors, because not even $2,000 gold is gonna make them fairly priced, or eventually overpriced. Or what all this means is that we have to wait more, because this sector never stays cheap forever. Certainly never stays expensive forever. That's the only thing. It's like, okay, what's if you're a value investor, what is the idea of value investing? It's that you buy something when it is undervalued, and then you will hold that pretty much as long as is required until it's fairly valued or overvalued, or you find something cheap. So time, unlimited time, in theory, is the only way to play the value investing route. You don't know when, you know it will close the price to value gap. So waiting until that happens, until some other people see what you see, or fundamentals get better, if it's a growth hodl, let's say. That's the only way to capture it. Waiting. All this means is that we have to wait more, because they're still not fairly priced. And like we saw in this period here, when gold turned around and went up here, this bump here produced the most epic rally I've seen in miners. This rally here, I mean, in dollar terms for gold and percentage terms were kind of identical. This didn't produce the same kind of rally. When gold was up here, juniors and miners were much higher valued than here. I mean, obviously cost inflation, etc., played a big part, but actually cost inflation was a big part already here. It's in this period that I think the margins for the gold producers were higher than here. So just from linear thinking, they should have higher multiples, and gold juniors should be valued higher probably here than here. Why not? Sentiment, different sentiment. Same as the sentiment is worse here with gold being here. Even if it's the same level, it's a complete jungle. It's complete chaos. You can't predict what sentiment is going to do all the time, and everybody is a momentum trader. At the end of the day, typically, I mean, even long-term investors, because you see it all the time. People buy a stock and they say, hey, in 1 to 2 years, I'm buying it because in 1 to 2 years this stock could be worth whatever. And then they comment on every daily movement in the stock and get frustrated by it. So they say one thing, they do something completely different. What they really do, and it's like, yeah, that goes for everyone. I mean, if we think a company is worth, we buy a company at X, we think it's worth 3x, or going to be worth 3x in sooner or later. It would be nice if it's immediately after we bought went up 3x. That typically does not happen. But and also on that point, people have way too high expectations. I mean, people who can't even beat the market buy stocks because they think, hey, I think this can go up 100% in the next month. And if it doesn't, they get, frustrated, bored, or sell or whatever. Like I've said many times before, my compounding goal has been 50% per year. Per year, 12 months for 50%. That's I don't remember what the exact calculation was, but I think I had there was I don't know if it was 40% annual growth rate or something that came out to or 50 maybe, came out to like 3.5% per month. People bitch if a stock goes up 20% in a week and then falls by 6%. They feel like they've been robbed. Even though that's like, if you could compound like that, absolutely insane returns. So people have, I mean, the only way to get rich really is to get rich slowly. I guess that's my point. And that's why, you know, I used to put all my money into pre-discovery plays, because I thought they could become 10 baggers in a day basically if they hit. And what we've seen and what I talked about is that, I mean, even if there's a discovery hold, they go up like maybe 100%. And if that is turns out to be a significant discovery, it will 10 to 20 bag over the next couple of years after that initial 100% pop. So the actual 10 baggers comes after the discovery hole. It doesn't come on the day of the discovery hole. And you're more likely to have a 10 bagger in a post-discovery play than in a pre-discovery play, because in a pre-discovery play you don't even have a growth curve. It's the growth curve manifests, or the theoretical growth curve comes into play after a company's made a discovery. Anyway, I had some debates on Twitter yesterday, because I mean, in my opinion, I'm a value investor. I know that works. Let's say I'm a growth hodler, whatever. Most people are traders, and obviously they won't really agree with the value investing route, let's say. And sometimes I put out some, let's say, well, strong comments perhaps to you know, make a point or whatever. I mean, I think that goes for like Magna. I think this looks like, one could say, hey, it's a bear flag, and it broke down. Now I think it's down to actually 87 cents or something. I mean, I think Magna looks better than ever, pretty much. It certainly is more valuable here than it was up here. I mean, the company, the business proposition, the expected long term. But nickel was higher though, sure. But of course, the value of a company is not what the price of nickel is at any given time, or same with gold. It's what the business value is expected for the rest of the company's life. And we know metal prices go up and down. But anyway, so I think this is simply, it's like, yeah, you know, momentum again. Here momentum was up. People were much happier to buy here than here, because they saw the momentum was higher. They saw other people make money and thought, hey, and you know, this is going to go straight to whatever value we think the company's worth, because I think the company's probably worth around, I wouldn't be surprised if it's actually worth around $3, given the management team and everything you could expect them to do with the company and the assets, and potentially acquiring more assets, and how nickel is critical, and it's probably Canadian nickel is probably getting more critical, etc. I mean, I think this is a joke. But in the short term, the market is a voting machine. So here people were voting up. People are comfortable buying when price goes up. People are not comfortable with buying when price goes down. And now you have, you know, what looks to be a kind of bear flag. So that's going to get traders to, let's say, I mean, if it's already too cheap here, let's say, and you have a bear flag and there's not enough buyers for whatever reason, then you have a break. And that's going to tell people, I don't, you know, and nobody wants to catch a falling knife. Nobody wants to sit on paper losses. That's basically, and that's also what came kind of obvious as I talked about, you know, to more traders, is like the emphasis was limiting losses. And sure, limiting losses is great and all. But if you maximize your returns, you can afford bigger losses. That's why I keep saying that I can afford heavy, corrections. And corrections are just, that's paper losses. We have a big problem if value is down here for Magna, which it's not. Then we have a problem, because then it should go down and stay down. If value is up here for Magna right now, and let's say it keeps increasing, maybe up here and keeps increasing, we don't have a problem. Yes, the voting machine right now is currently, it's a better company right now, but back here price was up here, now price is down here. That's just the herd and momentum and flow of funds, and my point being that traders subsidize long-term investors, because if there wasn't a short pattern, let's say like this, and it didn't break down, people wouldn't be selling. If the short looks great, that it's for sure a bottom or whatever, there would be more buying and less selling. So again, if the price of Magna should equate the value of Magna, and let's say Magna's value is up around at least here, it shouldn't be trading down here, but it is, and it actually went lower because of how the market work and how people work. So the funny thing is, I think that, again, since almost everyone is a trader and a momentum trader, traders subsidize long-term investors because they bring prices down too low, and they can also bring prices up too high. I don't think this was too high, but eventually there's going to be some profit taking, and then we know what's going to happen, because as soon as the trend changes, people's mood changes, yada yada yada. But it's like, is it a problem that Magna is down here? Is it better that Magna is here than up here or up here? That depends totally on your investing strategy, and if you have dry powder and how you look at things. If we knew for sure that Magna was going to hit $5, let's say, within 2 years, if we knew that for sure, we would know exactly what to do. We would just compare. It's like, okay, price is here, we know it's going to hit $5, so it means it's a even better buy now. If it's down here today, it's an even better buy than 2 days ago. Much better buy than here. That's of course not how people look at it, because people get comfort from seeing price go up all the time. Here is when people thought they were really smart to be long. Here people think they're real dumb to be long. Excuse me. Personally, I kind of like to look at charts, etc. But I never really sell or buy based on any charts. My way to go about it is like, here's another example, Nevada King. One could say this looks like a breakout, and it's been starting to get some momentum. And obviously, and I showed this chart before, it's like, looked like a reverse head and shoulder, yada. Traders would obviously probably get in, let's say this is the actual break, so they would get in here or here if they use this trend, whatever. But if you write as a, let's say, value investor, that hey, I'm not a strict technical trader, I think you're front running the next 10, 12 news releases, whatever, and you think that, hey, this system looks like it has potential to grow. Maybe you bought in here already, so you would be up like 38%, when perhaps traders are just getting in, let's say. So maybe, or let's say you value investing. You bought value investing back here, and it's like a trader might get in here and they get out here, quote, limiting losses, but you would have quite a buffer. I mean, even if it goes down here or back here, you would still be in the green. Because you were buying it when it was so cheap. But the number one thing is that everybody is afraid of paper losses. And I think that's a big asset to have. It's like to not be afraid of paper losses. There's a big difference about paper losses and real losses. And again, risk to me is overpaying for something that should go down and stay down. Paper losses is volatility. So I mean, again, Magna, we would have a big problem if the value of Magna was down here. Because then you should lose from here. There's no reason for it to be up here. It should go down here. If the value of Magna is around here, the value investors' belief is that one day the market, over the long term, the market will turn into a weighing machine, that you'll have voting. It's going to cross the fair value point at some time in the future. So you don't really have a problem. You're just the volatility just changes how much you're going to make. That's it. In the future, because investing is always about the future. This is everything beyond here is already, history. It's all about the future. But people are, again, like always, they look at this and project it like this. They don't think about price and value and price of value gap, where it's where the highest probability is that it's going to go eventually. They're scared if they think it's going to go down tomorrow. Here, they're greedy because they think this is going to continue. That's how it is. So, and I like this clip, for example.
Stocks are safe, and this is going to be worth more over time. That's what you're buying as a business. You're not buying a stock. You're buying a piece of a whole bunch of businesses. Are those businesses going to be worth more 10 or 20 or 30 years from now? Of course they are. But if you think you can jump in and out, or that you know the time to come in, I think you're making a mistake for tomorrow. Berkshire 3 times since I took over has gone down roughly 50%. Did I feel poor then? No, not at all. I knew it was going to be worth more over time. American business stocks are...
Okay, maybe it cut out a bit. But I think all my holdings are cheap. I think Magna is cheap. I think my entire portfolio is undervalued by, well, especially if you factor in the growth. I think my portfolio has a very bright future, because it's filled with companies like, Magna Mining, which I think are cheap, too cheap. The path of least resistance for my portfolio, the big swings in my portfolio will be up, not down, because the companies are too cheap. The price is too low compared to the value or expected value. The best is yet ahead, and that's where is. I mean, this is a hodl portfolio for a family member. Magna is very. It's the top weighting, so you can see, it's lately followed Magna quite closely. And people are, again, I'm not bitching. It's like this trend alone, 143.5%, low maintenance over 3 years. This is, of course, what people are chasing every month. And you'll see examples of people having portfolios that are up, 200% in 3 months or whatever. Typically, when you actually dig into it, it's like, it's typically a very small portfolio. It's like insane leverage, etc., etc. Because anybody can get lucky and unlucky in a short time period. For a while there in the crypto space, there was like thousands of cryptos. Everybody was making obscene money. Maybe people were up 1,000%, 2,000%. So you look at that, and you look at your mining portfolio, like, hey, I'm down 30% over the same time frame that they are up 1,000, 2,000%. Oh, I must be doing something wrong. I should be in crypto. That's obviously why people went into crypto and pushed it even higher, thus, having those returns materialize for a while. Do you think they actually have a long-term strategy? I mean, let's say you have a 6-month period where you put all your money into crypto, some Dogecoin or meme coin. You know it's worth zero. Well, you might be dumb enough to believe it's actually worth a lot, but still. Okay, would you rather have a 1,000% one-off than learning to have a long-term strategy where you could, let's say you could average 20% per year for the rest of your life? The market average is 8 to 9%, so 20% per year would be absolutely crushing the market. You would get a lot richer in time than somebody who got lucky once from taking too much risk and 10-bagged his portfolio in 3 months. Because they're eventually gonna turn that probably to zero, because they don't even have a long-term strategy. But you'll see that kind of stuff all the time. People taking immense risk, and the ones who actually, make it work for a while, you're gonna hear from them. You're for sure gonna hear from them. But how many can actually how many have a long-term strategy that is sound, that they, where they can repeat the success? Not many. That's why it's easy. For example, let's see here. This is the Bear Creek mining chart, my sentiment proxy of sort. Let's say you bought here because you saw the momentum. Maybe you made a lot of money over this period. Now you might probably have lost all the gains and probably worse off than ever. That's typically what happened. Making money in any given time period doesn't take a genius, and losing money doesn't take a genius. What is important is that over the long term, we have a strategy where we can gradually see positive compounding in your portfolio. That's all that matters. People brag about picks, people bash others about bad picks or whatever. Doesn't matter. It's only the long-term portfolio returns that matter. I have many stocks that have gone down 80%. That comes with the territory, especially in this sector. And of course, like I try to point out, it's like if you're losing money over this period here, that's not something to be ashamed of. Losing money over this period, probably impossible almost not to have lost money, maybe a lot. Same, on the flip side, does take a lot of bad decision or whatever to lose money over in this period, in this sector. And like I say all the time, I can afford the heavy retracements because I'm always 100% long from the exact bottom tick. All the time, because I never sell, and I especially don't sell low. I buy more the lower it is. So my portfolio, like Warren said, Berkshire has gone down, and that's Berkshire. That's a very diversified conglomerate. That can go down 50%. What do you think these shitcodes or beta plays can do here? It's like 80-90% easily. But they can also go up 500% in this period here, or this period here, or this period, like 1,000%. That doesn't happen to Berkshire. Berkshire will not go up 1,000% in like 2 years, will not go up 500% in 8 months, etc. But you can't afford the retracements if you sell out at the bottom. And it's like if you just draw a trend line, let's say, if the trend line is something like this, let's say you bought here in Magna and you're here and you're up like, I don't know, 20-30% and you're bitching because you were up 100% or 130% here. 30% in this period here from here is still a great compounding result. And if it's cheap right now, and if it's actually down here right now, and we know it should go back up here, I mean, you're already doing well. You're beating the market handily, and you're probably going to beat the market even more. But people expect that this continues forever. It's like, if this continued forever, it's like this pace here, which was, I don't know, like, let's say 3 months or whatever, if it would compound like that, Magna would be up 10,000% in 2023. That's not gonna happen. A 50% annual compound rate, let's say, might look something like this, and it will have movements like that. It's the trend, the long-term trend, that's important. And that's why it's like, yeah, people say that technical analysis is so important, you really need that. I haven't done a trade in this portfolio for I think a month now. Maybe it averages like 1% turnover every month, if even that. Obviously this month barely been anything. No TA, no technical analysis really, no market timing at all. Long corrections. This is pretty much a year-long correction. Things were too cheap, then it started going the other way. Now we've been in a downtrend, whatever. And this doesn't excite people. I think the GDXJ over this time period has I think it is minus 5%. So that's almost 150% over outperformance of the GDXJ in the junior sector, which is crappier than the GDXJ right now. That is absolutely massive outperformance. But this kind of returns doesn't attract people. I mean, think about it. It's just crazy when you think about it. This is massive outperformance, and if you told someone, "Hey, aim for this," they would like, "Why? Dogecoin can do 140% in a week. Why on earth would I bother with junior stocks?" And of course, the thing is that, given where the junior stocks are right now, the next big move is going to be up for this portfolio. It's not going to be down. It's going to be up. So I would say that we're near a low here, kind of similar like this. So I think this is going to go something like that. And for a while there, it might be up, I don't know, 300% in 3.5 years, whatever, which is absolutely massive. And if we go into a real hype mania, I mean, many juniors could go up 500% to 10,000%. So given where we are at this in the cycle, this is absolutely great returns. So, but one can't only judge your. I mean, that's why I tell people, like, you can't. If you start your portfolio here in junior mining, you can't look at the results since then and say, "Oh, that's my average return I'm gonna have in the junior. That's how crap I am." No, because you haven't even seen a full cycle. We're barely off the bottom of a down cycle, major down cycle. And you can't, at the same time, you can't, if we go up here, you can't just look at this period and like, "Oh, that's what I'm gonna average per year." No, because we're gonna have a cycle down later and an up cycle, yada yada yada, which is basically why you can only, I mean, if you have a good return from this period to this period, or it's like haven't lost too much, that's great. If you're down 50% right now, you invested here, I don't think that's going to be a problem at all. I mean, I was down 50% here after I got in here actually, and it went up 600%. 50% is no problem in the junior space. If you're down 50% and we're up here, yeah, you have a lot to think about. if you're down 50% when we're down here, it just comes with the territory. Some company news. Line 1 metals, Quinton talked about that in the Crescat presentation. I mean, I think line 1 is really cheap. I think gold is probably going to break out. And like always, like I don't know if line 1 is going to turn into a cash flowing multi-million ounce company. I know it's not priced for it. Check back in 2-3 years, where could line 1 be trading? I mean, if production doesn't go well at all and something else happens, maybe I will have lost money. Maybe a big percentage will be lost in line 1. If things go well, maybe it becomes a 5, 10, 15 bagger over the next 3 years, and it pays for a bunch of other companies if they even went to zero. Dolly Warden Silver, they're gonna do 45,000 meters with 5 rigs over the next 12 months. If you just look at the short, again, it's like technical TA people. They might, I'm gonna buy after a confirmed breakout. The value investor would be buying, if they thought Dolly Warden was cheap, if they thought the value was here, and this is the price of Dolly Warden, they was just buying. So maybe they have an average here. They're already up like, I don't know, almost 100%. That's before the breakout. But no technical trader is buying this dip here. I mean, kind of broke. Yeah, nobody's buying down here. No trader is buying down here. Only value investors buy here. Because traders don't want to lose money, even on paper. But a value investor would say, it's like, hey, this is probably a big fat paper loss. It's ridiculously cheap. The big move from here is going to be up and not down. So the risk reward would be great because, hey, if this company doesn't go bankrupt or whatever, and silver doesn't go to $10 or whatever, yeah, if it does, you lose money. If it doesn't, you're going to increasingly make money the cheaper this gets. I mean, again, it's like I'm very bad at selling, but it's buying I understand. Because I look at price to value. And again, it's like nobody can say that you need technical analysis because you can't. If that's so important, this hodl portfolio shouldn't have this kind of return when the junior sector is in the dumpsters. So again, wait for the breakout. I prefer to, as I see it, technical analysis, etc. That's like front running. No, joining the herd. Okay, it broke up here. Oh, now you think more people are going to buy. But value investing is kind of like front running the entire move, kind of. So you're front running the herd. The traders then will just, make your returns come quicker. And typically they'll be even larger because everybody likes momentum. So you're front running the herd and the traders. And it's the traders and weak hands, etc., that brought it down here. So value investors can pick it up for way too cheap and front run what they're going to do next time. Here's some other trading sardines, actually just interesting to look at. Northern Dynasty. The huge Pebble project, which is I don't know, it's been around for like 20 years, I think. Might never actually become a mine because there's so much opposition, but you still see absolutely huge swings. 2000 bottom, 2015-16 bottom, here we are today. Nothing has really changed with the asset, but it's like the permitting and sentiment. So on the one hand, it's very hard to pick a project that will work. And on the other hand, you don't even need to. So you can go the pure quality route and just try to identify the best, absolute best companies, and some will actually get bought out, but that's very, very rare. But there's huge opportunity in just playing sentiment. So it's like for Pebble down here, where do you think the next big move is? Could go to 0. But if something positive happens or sentiment changes, because sentiment is already near the abyss. If the glass is 90% empty, the big change is for it to get full, not empty. And of course, I mean, this one I like. This is the share price action people dream about. As soon as there's a correction, people bitch. As soon as there's a correction, people get scared. This is what I think they'll make the most money from. Just a steady increase. This is actually, this will make people even more money. Because just assuming you can buy some shares every month, the share price from here to here, regardless of which route the share price movement takes, it's going to reach the same point. But throughout the entire period, every buy in this kind of share price action here would give you a better return than this one. This feels good. Past history will always be up. You'll get immediately rewarded. Excuse me. This one will net you a way higher returns. And the same thing here. It's like the bottom here, I mean, was an instant, and then immediately the opportunity got worse and worse and worse and worse quickly. Now have been grinding down here. So it looks more like, I mean, an extended period of opportunity. So people bitch and bitch. I just buy every month because I know the next big move in the junior space, pretty much across copper, nickel, silver, gold in the junior mining space is up because everything is cheap. I just buy and buy and buy and buy because I know it's gonna sentiment. The next big move is gonna be up. And when we're up here, you can't go back in time and buy more here. You have to understand that the big opportunity is on the long side when we're down here. And the longer this goes on, the more shares you can buy, assuming, you know, the dilution, etc., isn't on a net basis decreasing your, let's say, share value. You'll make more and more money. But people hate this. People absolutely hate opportunities. Up here, they're very happy. And on to a point I made earlier, I mean, this is Headwater Gold's plans for this year. Finalizing plans for Spring Peak, Katy, and Mahogany, and they will drill Midas North. I mean, the funny part is like a 2-rig maiden drill campaign at Midas North. Midas North is a target. I've talked to a few geologists. They all love Midas North target. They already have a discovered Spring Peak and Katy, and kinda at Mahogany as well. 5 to 6 drill rigs. Do you think the news flow that comes out from 5 to 6 drill rigs over the next 12 months is more important than if gold is at 2050 or 1950 or whatever? If they make let's say they make another discovery at Midas North and keeps drilling that with 2 rigs, they keep having success at Spring Peak and Katy, Mahogany, whatever. Is that going to have a bigger impact on how people look at a share, or is than where the gold price is going? If gold goes up, you'd have a multiplier effect. If gold goes down, well, we know sentiment is already in the toilet. This could still go up. And of course, for a value investor, the most important thing is value. What's the price today? That's the only thing we know. Can it be, over the next 12 months, can it be become obvious that Headwater Gold should be worth more than the current price? I think there's a good shot at that. And again, the next big move sentiment-wise is going to be up anyway. So you have that as an option, let's say. That the sentiment can't get much worse, but sentiment can get much better. So, I mean, the odds are stacked. Western Alaska. These are the targets. The last hurrah is going to be... These are the targets within the Illinois Creek project. What if they hit that last hurrah? What if they show that, yeah, they found the continuation? That's a pretty big target. What if they hit some other targets? If this turns out to be mineralized, that would probably be quite a bit bigger resource eventually than Silvercrest has. And Silvercrest has a market cap, I don't know, 1.5 billion or something. I think Western Alaska has a market cap of 110 million or something. You don't need to be 90% sure that that's going to happen. If it happens, there's a good potential for a 5 to 10 to 15 bag or whatever over the next couple of years. And again, that would pay for 5 to 10 to 15 similar stories where the result was negative. The winners are supposed to pay for a lot of losers. And you can only have a big winner if you can hold a stock for more than a year typically. I think I touched on Nevada King. Trigon Metals is starting to move. This looks like, again, I don't own or buy or bought Trigon Metals because there was some TA thing. I think it looks stupid cheap, and if things go well, it's gonna end up breaking these lines, whatever, resistance lines, that the traders will use to get in, and as momentum goes up, people will be more keen to buy it because now it feels safe, so the herd is gonna join in, and the traders are gonna join in, which make the herd feel safer, and they're gonna buy even more, and then they're gonna maybe get FOMO, whatever. So again, you could buy it. You could buy after a breakout, let's say, and hope that yes, this run will continue. If you're a value investor, maybe you accumulated, so you're already up 55. You got 55% to spare already. So again, I don't really buy or sell based on TA. But it's interesting to note, it's like, hey, if things go well, sooner or later, if you bought it here and you thought the value was up here, and if things go well, you think value is going to be like this or be up here and go higher, who knows? If this production works out well, maybe it will be worth like, who knows? Maybe like $2 in 2 years or whatever. Yeah, so you kind of know if things go well, you might have 10 bagger potential or more. You don't need to be 100%, 90% sure about that. Even if there's a 30% chance, that would make Trigon Metals cheap, especially down here. And along the way, it's gonna go like that, perhaps. And now maybe things will start to work out again. You don't use the TA in that sense, but it's fun to see. Hey, if I'm right. If I'm right and it's really cheap here, and it turns out positive, it will break this, and that's when the traders are going to help you out to get the herd up and get the herd in, yada. Oh, my nose is getting quite thick, so I better wrap up soon. Take a look at this article, I think. Again, I see almost everyone is prepared for it, or almost everyone has a pure beta portfolio. It's mostly crap cows. I can't invest like that because I get nervous as soon as we have a dip, because I kind of know that I don't even own something that I think is worth a lot more than it is, because you're only waiting for the sentiment to change. But there are some people who are very good at that. Chad, for example, from who's on K Report, he's very good at taking his emotions out of it. He's mostly a beta swing trader, so he knows when things are cheap, doesn't care too much about growth or anything like that. He can buy producers when they're down here. I mean, he's made money in lithium, he's looking at uranium right now. He likes silver and gold right now. Again, he knows when the sector is cheap. He knows when the big move is up and not down. And he has the patience to wait for that, because he's seen it a bunch of times. Here we have Nova Gold, which is that huge resource up in Alaska. Maybe not the clearest version of a trading sardine, but you still see these crashes. Incredible rallies, crashes, incredible rallies, crashes, incredible rallies, and it's like, yeah, this looks like it's, let's say, broken out of a resistance line that goes from like 2006 or 7 or something. And we've seen, okay, when this breaks, it's 100, 200% run. This was what, like 300%, 300% run. Not the best trading sardine possibly, but it's actually, it's a kind of a high quality project, but has permitting issues and capex, and Barrick owns half of it, so it's like, from an economic standpoint, it's a legit project, but there's other issues, etc. But that's not going to stop. If we go into a hot sentiment environment and people like, they got 20 million ounces, and they got Kaplan behind it, and he's going to be out there promoting, etc. It's going to go higher. It's like, I don't know, to sum up, back here, when this is Bear Creek again, here everything was dirt cheap, but gold was at 1100s. No gold mines really made any money, so at face value the sector was worthless. So at that point in time, if you bought something, for the moment everything almost was overvalued, even though it was dirt cheap, because the business as a whole was kind of worthless at the time. Now, with gold at 2000, gold miners are making money, they're paying dividends, etc. The gold sector is not worthless, not by any means, and it's, the demand supply is increasingly favorable. That's also the thing. It's like what I talked about before. Value investing, time is how you capture that. You buy something cheap, then you wait. That's all you do. If it goes down, it becomes cheaper, you buy more and then wait. Cheaper, buy more, then wait, buy more, then wait. Sooner or later, your average play, assuming you're right on average, you're going to go up. So you don't know when you're going to get paid. The lower it goes, the more you're going to get paid. But the only way to capture it is waiting. And of course, if you buy a quality company with growth and a competent management team, the only way to play that is time. The more time you give a good management team with a good asset, the more you expect the value to grow. And from a sentiment standpoint, we're down here. Do you know when it's going to hit high sentiment? Absolutely not. Will it? Absolutely. How do you capture that? Buy as much as you can and then wait for that to happen. So personally, I have no idea why people would bother with, let's say, to be a pure technical trader right now, because the excuse me, I've never seen a better opportunity for just hodling and waiting than now. Because again, now gold is at 2,000. Business is good. This is a way bigger layup for a value investor right now than down here. And I bought this low. Maybe the miners' fair value is up around here at least right now. They're down here, so it's like, yeah, I don't need technical analysis. If no technical analysis buys these lows. I mean, from what I hear, a lot of technical analysts or that's what you call them, technical traders in the gold junior space, etc. They sold this low. They sold here. Of course, in that case, they have to limit their losses because they don't have any gains. If you sell this, that is one of the most expensive things you could have done over the last 10 years, 15 years. It's way costlier to sell down here than to buy up here. Selling cheap is the most expensive thing you can do. And if you sold this, when did you buy back? Here? Maybe. Here? I mean, this looks at a point in time like a breakout. Yeah. I don't think you need technical analysis, really. It's like, yeah, you might have... you might be limiting losses or whatever, but the big gains comes from value investors. And if you're a trader, so you know you need to get out and in quickly, then you have to pick a high liquidity stock, etc. Which kind of makes it hard to, I don't know, to actually, do that strategy in real time. But hey, I mean, it's up each his and her own. I haven't needed technical analysis. Really, my technical analysis sucks. I'm not a good trader. I'm not a good seller. And it's like people ask me all the time, when do you sell? I mean, I am biased to the upside. That is why I try to find companies where it's like, if you see growth potential for the next 2-3 years, theoretically, if theoretically you don't really need to think about selling for the next 2-3 years unless it gets like egregiously expensive or whatever. And of course, if let's say Western Alaska hits at any of these targets, whatever. Let's say it can triple the amount of ounces it has. Well, then you already kind of have a success. But then it's like, yeah, they've tested a few other targets, etc. It's like, they're getting to critical success. That's it's going to be a mine, etc. It gets priced like it's, good chance of getting a mine. But you don't see really where the growth is going to come after that. Well, then you don't. If you don't have a 3-year growth potential that you can see, I mean, then you can sell that and find some other company where you have that 3-year growth potential. So that's why I keep saying that I don't know when to sell. If I find something cheaper with a even brighter future, for example, I'm forced to sell the company, the stock that I'm least excited about, to buy the one that am excited about. When I find a better buy, the sells take care of themselves. And I always want the companies I own to have, 3-year hodl potential. Again, let's say Trigon Metals. Yeah, now we think it probably has a lot of growth potential until, let's say, 2025, whatever. It's like, let's say things go well. Dragon Metals in 2 years is up here, let's say. But then, you know, you don't see too much growth. Maybe the growth curve is this instead of that. But you find another company that has a growth curve like this. Then you can sell that. So even though it's not a you know, clear sell or anything like that, and maybe it will actually, you know, keep on chugging higher, you found a better opportunity. So it's like, I have no idea if Dragon Metals actually was a sell or anything like that here, but if you find something that you think is a better buy, by definition the sell wasn't bad. So it kind of takes care of itself. But if you don't find any company where you think will have a better, let's say, value creation curve or a higher price to value gap than Dragon Metals, and you'll be happy just having this, even though the price is going to go like this, obviously. So that's the thing, but that's also why it's like most people don't know why they own a company. That's why they get scared, and it's like everybody, when should I sell? When should I sell? Well, you don't probably know why you bought in the first place. It's like, if I am wrong, if I overpaid for a company, maybe I paid this much and the company value is actually here, yeah, I might have a problem. But if the growth potential is something like this, yeah, I overpaid now and it's going to take some time. I mean, let's say it takes 6 months. If the growth continues for this price to look fair, but in that case I get bailed out by the growth creation. So that's why I also like, I don't look for the perfect entry. I mean, if you're kind of right, it's like Western Alaska. Where's the? I mean, Western Alaska. I mean, given what we're seeing in this picture, it's like, who cares if you paid 120 or 100 million or 130 or 115 million, whatever. It's like, if last hurrah works, I mean, that's 130 or 110. I mean, that's gonna look cheap regardless. If some more targets work, I mean, maybe $6 will look cheap. So I don't get, it's like people wait for the perfect buy or whatever. And of course, like where's Magna? Oh, people bought here, and it's like, oh, now we're down here. It's like, I mean, who cares if Magna is going to be worth like $5 or something in the next year? Would you be bitching if you bought it at 110? Yeah, 110 to like $5 in 2 years. I mean, again, it's like the market average is 8 to 9%. So if you bought here and Magna is, you know, up here in a year, I mean, just at 120, that would actually be a pretty good return. So yeah, it's like, get rich slowly. It's the only way. It's the absolutely only way. And don't believe everybody who's like post these, I don't know. You know, you see people sometimes. I had this. I was in this stock and it did super well, and yeah, maybe that's their only win in 5 years. You don't know. Just know that 95% of people don't beat an index, and that's for the overall market. I would guess less than 5% actually beat or make any money in the junior space. So it's supposed to be very hard. But think about it. Almost everyone out there in the junior space is losing money. And I'm not talking about this period, because here everybody loses money, almost. But if you gave them, they stayed in this sector for like 5 years more, they'll probably have lost money too. So I mean, the bar is not high. Just don't make the egregious mistakes of like selling these lows. If you just stop selling these lows and stop piling in at the highs, you're gonna do fine. It's like Pierre Lassonde said, the gold space is the easiest space according to him. Because why? Simple reason is because this always crashes and always rallies, and then always crashes and always rallies. Think about that. I mean, I mean, he's kind of, I mean, shaming everyone who thinks this sector is hard, and that's a good thing. He should shame. I mean, you should take responsibility. It's not it's not okay if you're losing money from when we go from here to up here. Of course, most people won't even be around because they sold the lows. So it's like you have to be kind of hard on yourself. I mean, my motivation is like, I love people saying how hard this sector is. Makes me want to beat it even more, because in one hand it's so simple, because as Pierre Lesson said, you can just buy low and sell high. You don't need advanced technical analysis and yada yada. You can buy just a bunch of beta companies right now, kind of cashed up, and you wait. And if you get 100% in the next 1 to 2 years, that's a great result. Well, not if you are down 50% now, but it's like, again, when this goes to from this sentiment to high, it's more than 100%. Like you can obviously see in the case of like Bear Creek, typically goes like, well, at least 300%. But if you can't sit in this sector for, let's say, the next 2 years, if you if you need this to go to here within 3 months, or you're throwing in the towel, you're never going to make any money. I have absolutely no idea when we're going to get to a high sentiment environment. Not even $2,000 gold have us up here. But that doesn't matter. It just means that it's going to come later. That's the only thing that matters, because we're going to get to a high sentiment environment. Sure as the sun comes up in the morning. Yeah, thanks for listening. Apologies for the coughs, etc. Consider me biased about it. This is just how I think about things and how I think about specific companies. Assume I own all companies I talk about. Assume I'm sponsored by all. I just assume I'm biased, and like, don't. Do your own due diligence. Again, if you don't know why you own a company, don't buy it. If you don't see the case, don't buy it, because you're going to be selling at the worst possible time. And you see that in the best, absolute most no-brainer cases. People buy it and are like, yeah, I bought it because of this. It's going to be worth more, yada yada. Soon as you see a retracement, there's like, they have no idea all of a sudden why they own it. Because now Mr. Market is saying that, hey, you're not right. You look stupid right now. Like, everybody's looking stupid over the last 2 years. Doesn't mean that we were wrong. It's just Mr. Market is friggin' dumb. It's like, you have to look stupid for like 2 years. I mean, this top to top here was 4 years. So forget about being in this sector if you're not going to be in it for at least 2 years from here. The big rally might start tomorrow and take a year, might start in a year, take a year from that, might start in 2 years and take a year. So make money slowly. That's the only way to go about it. If you're up 10% in a month, that is incredibly good. If you can average 4% per month, that's also incredibly good. If you're down 50% when we're at these lows, it's not a problem. Yeah, etc., etc. Not investing advice. Thanks for listening. Bye.